Welcome, everyone. Great trading day today. Lots of volatility. It's a very exciting time to trade in 2022. So it is earnings season right now. So it is a very profitable time to trade. It doesn't matter what your strategy is or how you trade. You get big moves in stocks during earnings season. So last week was the first week of earnings season. Big earnings out tonight. We can take a look at it if we have time here. I know we're starting a little bit later. IBM reports after the bell. Someone can plop in the room and tell me where it's at. I talked about that today on Ameritrade. There's so much going on this week, so many big companies reporting, and next week too, that it is a very, very good time to trade and make money. Of course, you have to know what to do. And that is, of course, what we're going to talk about today. So thank you for having me. My name is Melissa Armo. I own the stock SWOOSH, which I started 10 years ago. And I've been trading really now for 14 years, hard to believe. But I trade one strategy. It's based on gaps, and I trade on the side of institutional money. I also talk on television, and I'm working on producing right now my own television show, and hopefully that will finally be launched this year in 2022. So it is an exciting year to trade. It is an exciting year to make money. Despite the downturn in the market and the markets, you know, if you've traded before, that you can short. So you can short. So even if you're in an IRA or some kind of 401k, and we've had this dip starting into the beginning of 2022, guess what? You can make money as an active trader shorting the market, or you can do puts and options. I heard the little bit tail end of the presentation right before. I do options, but I do straight calls and straight puts. Everything that I do is directional based, and everything that I do is based on the gap. And everything that I do is based on trading on the side of institutional money. Now, what happened in the market pretty much since the beginning of this year? Guess what? We've had institutional selling. We've had selling. It's been hedge funds have been selling. I knew that by reading the chart. And also I found out from talking to some people, I live in Manhattan, I live in New York, that hedge funds were selling into this drop that we've had in the last 2 weeks. So it's been, again, a very profitable time if you've been on the right side of things. But you've always got to be on the right side of things. It doesn't matter when the market's running up or the market's running down or any given day, whether it's earnings season or not, you have to be on the right side of the trade in order to make money, which is you got to get the direction right. If you have questions, you can email me at melissa@thestockswoosh.com. I do give trials to my live trading room. If you're interested, you can email me. You can call me if you have questions at 929-3200 GAP. And you can also follow me on Twitter, Facebook, YouTube, or Skype. So let's start right into it, the crux of it. Can you make money in the market? The answer is yes. Then why do many traders lose? If you're out there and you've been attempting to do this for more than 5 years, there may be a reason that you're back and forth, and you're still trying to find information or particular strategies. And maybe that's why you're here today. You're here listening to all these speakers here today because you're trying to get ideas and you're looking for the next steps. The next road to get down that's going to take you to the road of profitability. You can make money in the market, but I find that a lot of people are all over the place and they never really get good at one strategy because they don't stay focused and they also don't have a strategy at all, okay? A lot of times people use something, could be a moving average, could be an indicator, whatever, but it really is not a strategy, okay? So you can make money in the market, but it is about the consistency. You have to have more wins than losses, okay? And you have to get serious about it. Part of that seriousness is the focus. We've had a very good start to the year. By we, I mean the stock SWOOSH, my group. We have had absolute all winners so far this year in the live trading room. Now, obviously, there are times I take trades that lose, but so far to date this year, we've had absolutely no losers. That has made me even more focused. I'm like hyper focused now because of the fact that I realize that I'm doing so good. Now, whether you're having a good day or a good week or a bad day or a bad week, the fact is you have to be focused all the time, 100%. And I always say you don't have to be focused 6.5 hours a day. I trade the US stock market. It's open from 9:30 to 4. We don't trade all day. The trading room I have is only open in the morning for about an hour, 2 hours the most. And we usually only trade the first 30 minutes of the day. I say you can be perfect for 30 minutes a day. You can be perfect for 1 hour a day, but you can't be perfect probably for 6.5 hours a day unless you close your door, turn off your phone and your computer and don't talk to a single soul. And most people are trading, have other things, a family, a job, and it's hard for them to block themselves out. But for 30 minutes, you can do it, okay? Now I clip this chart, this is of the SPY. Again, consistency. Consistency is the name of the game. Today, tomorrow, and for the rest of 2022. I think 2021 was a very bullish year for the market. If you look at it, the market made many brand new all-time highs. Didn't make any sense with the backdrop of the economy, but the reality is we did have a bullish year last year. And as a result of that, you could have very easily made money trading in 2021 by going long strong stocks. The market, you could have gone long weak stocks and made money last year. This year is going to be very different. And I think if anyone's even taken one trade this year, you know that that is the case. This year is going to be volatile, but that doesn't mean it's scary or bad. Volatility is actually good for you as an individual trader. Why? Because you can make money on volatility. Volatility also doesn't necessarily mean selling. People don't understand that either. While we've had selling into the drop this year, it does not mean that selling will continue all year or even this week. You saw the bounce we had today and the rally that we had into the close. So volatility is unexpected. Something unexpected happens. And when that unexpected thing occurs, you have to play on it in the right direction. And again, that's how you get a lot of profit. Big moves, volume, momentum, and again, volatility, which is what is unexpected. Something unexpected could be a move up. Something unexpected could be a move down. And again, I'm doing it in the gap, and I will review what a gap is here today. But there are billions in the market. I don't know if anyone watches that show on Showtime. It just started, again, the new season last night, Billions, that show that's on Showtime. It's pretty fun and good. There are lots of people that are making money in the market. There are billions of dollars in the market. All you need is one individual trader to get a tiny piece. $500 a day, $1,000 a day, even with a small account. It is possible, but again, it goes back to the idea of the focus. And you have to have more wins than losses. So you need a strategy that has big moves. Again, if you're someone that has a small trading account and you do not have a large trading account, then you can't take big size. So you need the big move with small size to get the big profits. If you short a stock at $10 and it drops down to $9, and if you have 1,000 shares, you can make $1,000. You don't necessarily need a large account for something like that. $1 is a good move. Depending on the stock, we could be looking for $3, $4 in any given move. Again, the market is expensive right now to day trade on margin, but you can do options in really reasonable costs. And we will review some options trades today too. Any questions, you can chat them in the room. I do have the chat up on the side, just FYI. Anyways, getting back to what I was saying, success or failure of this endeavor, this trading endeavor that you have decided to do, if you are doing it or you're thinking about doing it, has a lot to do with the quality of your system, okay? That is going to make or break it for you, point blank, okay? If you don't have any system at all, that's another problem. So how can you become successful day trading? Again, what do? I day trade. Well, I do options too. I consider everything I do pretty much the same thing because the options trades that I'm doing are fast. Now, it doesn't mean I'm in and out in 5 minutes of my options trades, but I may be in and out of my options trades on the same day if it has a big move. And even still, I'm doing the weekly options. So while I may hold my options for a few days, it's still I'm doing the weekly. So I still consider that fast options trades. I'm not paying out for months and months and months for the options, okay? So either way, it's quick. I call it chunking it out. You go in, you get the move, you get out. You get the momentum, you get out, okay? So the number one key ingredient to becoming successful as a trader is having a specific system and a strategy that can offer you reliable and consistent profits. Again, consistency is the key on a regular basis. Number one, you need a strategy. Number two, buying dips is not a strategy. And I think a lot of people did that last year. They made money and now all of a sudden it's not working. People will go back to that. You saw that in the bounce today. People are going to buy it up tomorrow, but buying dips isn't a strategy. Trend trading also is not a strategy. And you will lose more than you win doing both of these things, okay? So again, you have to have a strategy. And I think a lot of problems is that people think that they have a strategy, they're using a strategy, and it actually isn't a strategy at all. All right. So anyways, getting back to what I was talking about in relationship to institutional money, what am I talking about? Big money in the market, huge money, big positions, hedge funds, big professional traders, hundreds of thousands of millions of shares, kind of like you saw the drop in the dump that we had in the last week or even today. Even from Friday to today, we got down pretty big in the market. All right. What was that? That was selling. So my system follows institutional money in the market. It could be buying, It could be selling, okay? But it's big, big, big chunks of money. So that's what I'm looking for, the big footprints that come into the market. And I'm reading that how? Volume, momentum, and also in the gap, okay? So let's take a look at Netflix. So I was talking about, excuse me, IBM. IBM reports tonight. Netflix reported last Thursday. Can everybody see this here? So this was the close Thursday. Snuck as a bug. This was around 508 and change. Now, what is a gap? Let's go over that first. A gap is the difference between the close and the open. So Netflix closed here around 508 and change, open down in the morning, gap down at 400 or whatever, okay? So this is the close, this is the open, this is a gap down, okay? What is a gap? A gap is the difference between the close and the open. Today, Netflix had another gap down. It closed on Friday, similar to, close to where it opened, and gap down this morning with the overall market here. Then it fell, okay? I clipped this close to around 3 o'clock today. So anyways, we had a gap down here, then we had a gap down here. Now let's look at a gap up. This is a bearish gap, by the way, and today. But let's just talk about a gap up. There are bullish gaps in the market as well. Excuse me. The market closed, or Netflix closed here and gapped up here. So from the close to the open was a higher price. It rallied. This was back in October. So this is just one example, though, of a bullish gap. And this is an example here of a bearish gap. So that's what a gap is. What I'm looking for specifically in each individual stock and gap and day is to find the gap, predict the directional bias after I see the gap to determine if institutional money is going to buy it or sell it, okay? Now, institutional money very well could have come in and bought Netflix here on Friday. It did not happen and play out that way, nor today here either, but it could have. So I go through my process in the morning to figure that out. What happened here, it got dumped in the gap, followed through the next day, boom. I think the low today came down, it broke 350. So what is all of this? Institutional selling, okay? So if you were short Netflix, you made money. If you were long Netflix, you lost money, okay? Let's take a look here at the market. Again, this was about 2:45, then I clipped this and stuck it in here for today. Let's go back to the beginning of this year. This was right around here, the beginning of this year. Here's the sell-off I was talking about earlier. Again, we bounce into the close, but let's just talk about what happened since the beginning of the year. What is this? It's selling. Again, I was talking about it earlier. We had institutional selling, okay? Here was a rally up. This was the last week of 2021. We had institutional buying. Market closed here. This is the SPY, gapped up, rallied, closed here, rallied, closed here, gapped up, rallied, closed here, gapped up again, rallied, made a new high. This was the very end of 2021. Okay, so this was buying. So again, when you're trading on the side of institutional money, it's actually very easy to make money when you're with it. It just moves it. It's called momentum. Like it's almost like where you're sailing, you know, along where the ocean current and you're in a boat and it's just taking you along and you don't even have to swim or move or do anything at all. The current just takes you, or you're going down a river or something. Or when you ride the waves, if you've ever ridden waves in the ocean and you ride them into the shore, it's fun in the summertime. Momentum takes you where you need to be, but you got to be in the right direction. So I developed the system, again, this is a long time ago, and I've been using it ever since. I use it for swing trading, day trading, and options, where I will rate the gap in the morning like I rated Netflix, like I rated the market. So I get up and I do the work and I determine if I think something's going to rally, get bought, or drop and sell off, or be shorted. And then if I see it, I do it. So I teach this system in a class. And if it's something you're interested in, you can email me. If you are not interested in learning and you only want to trade, then I have subscription services that you can sign up for and get the calls. I think learning is important, though. And I think when people understand what to do, they trade much, much better than if they don't. Again, but getting back to the nuts and bolts of why my gap system works is because of the fact that I'm looking for institutional money. Gaps themselves are created with large institutional money. That is what makes the gap in the first place. When you have a stock like Netflix that's at 500 something, and that opens the next day from 4 o'clock to the next day at 9:30, which is less than 24 hours at 400 something, that is being made with institutional money. That was a large gap, okay? Now I will do small gaps, I will do large gaps, I will do all kinds of gaps, ups and downs. But anyways, that was just a very good example because of the power that had, and so quickly that it came in. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correction to play the gap and confirm that the large money will flow with it. Again, just think of it like you're riding the wave into the ocean. You're riding it, it's carrying you along. That's how money works. That's why you want to be with it, because as one individual trader, you are not going to move a stock or the market or anything at all. By having a formula to rate and qualify the gap, you get confirmation and conviction. Conviction is very important to trade. When you're risking your money in something, you have to feel like 100% is going to work. Does that mean 100% is going to work? No, but you feel like it will. If you don't believe something's going to work, if you're 50-50 crapshoot, those aren't good odds to trade. When I'm trading, I look at his odds. High odds, this will work in my favor. Low odds, I don't want to do it, okay? It's about odds. So anyways, you have to have conviction that the large institutional money is on your side, and then you play it. Gaps are an event, and they create a sense of urgency. Hurry up, quick, quick, quick. That's why you saw the sell-off today. That's why you saw the sell-off in the last week. It's a sense of urgency. Shorting is panic. Selling is panic. It's panic action. And it happens quick and it happens fast. That's one of the reasons I like to short. So that's an action that's being forced by participants of the stock. This is why gap trading is incredibly powerful. And again, we're in earnings season, so there's lots of gaps. Trading golden gaps is a powerful and profitable way to trade because you're trading the side of power money. It's big money in the market, and there's lots of it. Once you see the gap, is it not too late to act because institutional money has already made the move? Not necessarily. It has to do with the rating. If I rate it, that it's still going to continue, then we do it. I'm going to go back here to the SPY. I called puts in the market on Friday in the SPY. They worked. You could have got out on the Friday and at the end of the close, they worked. If you stayed in them till Monday, you made more money. Okay. So the reality is, but I called new trades today too, and they were profitable too. So I get what you're saying. Someone's saying, well, isn't it too late? I'm not predicting like a Netflix gap. This could have gone the other way. I got to be honest with you. I had called puts that expired Friday. If anybody, I didn't even email because I've been too busy to email to see if anybody was in them. It would have been insane to stay through a trade through earnings, not knowing what the reaction was going to be. But I will tell you, I had called puts that were 5:30. I forget. I called like a couple different strikes. If you stayed through them 30 earnings, which was the last day of expiration, which again is crazy to do because it's almost like gambling because the stock could have gapped up to 600. That would made your whole month and made your whole year if you did it, even if you had like one contract. Now, again, that wouldn't have made sense to do because you don't know the earnings. So I'm not predicting the result of the earnings or the reaction to the stock before the fact. Again, I don't know what IBM is doing right now. I talked about it in Ameritrade today. I'm not in IBM, but tomorrow morning I will look at IBM and then I will predict if it is going to follow through in the gap or if it's going to reverse. And that will be the decision that I make then on the live day that I do it. Does that make sense? No one could have predicted that Netflix fell the way that it did, but you could have been in the trade I called in through the very last day. I never tell people to hold an options expiration the very last day unless you're down in the trade and it could reverse, which sometimes happens. But if you're profitable in a trade, which we were in those trades, to just roll the dice and know that it would drop like it did, you just don't know. It could have reversed. In this case, it did work in your favor. But a normal trade is you get the move to get out. And that was the normal trades that I called the previous week, which was before the expiration. So I'm not predicting the gap. I am rating it in the morning in the pre-market to determine if in fact more selling will come in. And if you think it can't, you're wrong. That's the mistake that many people make too. And this is to the upside and the downside. We're talking about shorts here, but sometimes people think, oh, it can't keep going. It can't keep going. It can't keep going. The market has been rallying since the March lows from 2020, from the beginning of the COVID drop-off. Who would have thought? Who would have thought? I mean, many people exited longs that are like, oh, crap. And that was into the rally into the end of 2020. And then we went all year 2021 Do you know what I'm saying? So it's kind of like, you know, people think, well, we can't keep going lower. Yes, you can. We can't keep going higher. Yes, you can. Yes, you can. But that's not our objective here. You're never going to get out of the long or the high. You're never going to get out of the short or the low. To do your best you can. Your idea is to make money, and that's what you do. Now, I didn't have time in here to add the last couple of days of trades, which was today and Friday, but I will tell you, we shorted the market today. We did the SPY, and we did NFLX, obviously, on Friday as a day trade. But in the day trade room, we've won all year. Now, there were some days where we didn't do any trades. That was okay. You know, you're better off not trading if there isn't anything good to do. So in the case here, on average, I have about a 75% win ratio, but in reality, we've been 100% this year. It's been a good time. As I said, I've been focused, but everything I do today, tomorrow, the next day, the next month, is the last 10 years is always the same. I get up in the morning, I rate the gap. I don't know if we're going to do IBM or not tomorrow morning. I can tell you what I think of it if we have time when we're done. Any other questions here? In fact, somebody tell me where it's at. I know where the chart is in my head. What's IBM doing? Because I can't click off with this type of software and click on and on without messing it up. And I want to get through to the end of it. Somebody quickly tell me where IBM is right now. I'm sure that it's already out. If somebody wants to do that. Anyways, okay, going back to the SPY, we have the drop here. Here was the 1 minute when we did a day trade. Again, a day trade is a trade you're doing on margin. Where do you get margin? You get margin at a broker. You can open up a prop account. You can open up a retail account. At a retail account, you're going to get 4-to-1 margin a day trade. And at a prop account, you're going to get 10-to-1. There's so many options out there for people to actively trade. I mean, there's just a ridiculous amount of options out there. And the low costs involved right now to trade are just staggering. I mean, again, when I started trading, you know, so many years ago, you had to pay for a platform, you had to pay commissions, and you had to pay for ECN fees. I mean, a lot of these things have gone by the wayside. You can get free platforms, you can get free commissions now places. It's very economical actually to trade. You do have to have the money to open up an account, and you do have to have charts, which is what I use. Everything I use is based on technical analysis. It's advanced technical analysis in the gap. So we did this short here in the SPY. Here was the trade. Again, I'm going to go through this here for 2 risk amounts, advanced trader risk and beginner risk, just in case. It depends on what you have. The day was 1.7. And again, I'm going to go back to the 1 minute here. Here's the drop. Boom. We shorted it. So this was January 7th. This was a day trade. We entered at 467.20. Again, you could do this as a put. You could do this as a put if you don't want to do the trade on margin. Shares was 2,000, risk was 2,900, ad was 468.30, doubled up in size, got the drop, average price 467.75. Nice move in here. Not even a big move for the market, quite frankly, but huge profit. Why? Size, good entry, good stop. And I'm going to go back to the 1 minute chart and show you. Again, here was this drop. Get it? Boom. Get out. This was not even the low of the day because, again, very difficult to predict. Very difficult to predict. Your job is to just make money. And we usually earn it out very fast in the morning, which is what this trade was. Now, if you risked a less of an amount, say you risked $1,160. Again, this is a trade on margin, a day trade. You could have done a put too. Shares was 800, doubled up on the ad, boom, get the drop. You could have made 4,080. So again, this day was the 7th. So let's look at the 7th actually on the daily. Go back to find the big chart. The 7th was here. Okay. And again, this was the beginning of the year, 4, 5, 6, 7, boom. Okay. So we're always looking for the gap. And we're always looking for the best gap that we can find. Could be a bullish gap, could be a bearish gap. In this case here, like I said, there's been just so much opportunity this year, 2022, to do shorts. And a lot of traders, I think, are scared of shorts or don't understand how to short or don't know how to short. And they get confused with shorting. You should know how to short and go long, to be honest with you. You should be able to do calls and you should be able to do puts. But either way, it is about proper alignment. What are you doing and why are you doing it? If you can't say to anyone why you're doing this trade, if you can't even explain it, then, I mean, that's a problem right there. And again, I was talking about conviction. If you don't even believe that the trade's going to work, why are you doing it? Why are you risking $1, let alone 100, 500, or 1,000? And I mean, sometimes people take trades and they kill them so quickly when they move against them because they really don't believe in the trade. And that just chops up your account. You know, when you're having loss, even if they're small losses, that's just very, very choppy trading. You've got to make good choices. You've got to find quality trades, and you really need a good system in order to do that too. So my system tells you how, what, and when. How do you make money in the market? I trade gaps. I'm looking for highly profitable gaps that are focusing on large momentum. I'm looking for them in the pre-market in the morning. What stocks am I looking to trade? Anything with volume, anything that moves, no low float stocks, no cheapies, got to have volume in it. It's all companies that you know, Facebook, Apple, everything. I'm always trading the gap in the direction of the gap. If I think it's going to reverse, I won't do it. I won't do it then. I'll stay off. I'll find something else to do. Okay. When do I get them? As quickly as possible, right into the gate, between 9:30 and 10 in the morning. That's when I want to get the move. Okay. And again, if we're doing options, we may hold them a little bit longer, but I'm looking to get in and out of the day trades very, very fast. So let's talk about options here. We did an option. It was the end of 2021. Again, we had the rally up into the very last part of the year. And then I called it put in the queues into the very end of the year, but expired in this year, 2022. Here was this day. See this guy right here. So this is a gap down. We did a put in this 1229 in the QQQs. So I called this in the afternoon last week of the year. I called the 400 puts. We'll go back and look at the chart for into the following week. Cost was pretty reasonable for the market, 390. Advanced trader risk 20 contracts, 7,800, sold at 18. Profit was huge, 28,200, a 362% return on investment. How did that occur? Momentum, volume, all of it. Got to get the whole thing right, got the direction right, got the sell-off into the beginning part of the year. So let's go look at it. Again, this one here expired the 7th. Get the drop. Boom. There's a sell-off. Okay. Could I get out here? Could I get out here? Again, you don't really want to hold into the very last day, but look where it was the very last day. Take it to the right. The very last day you could have held it. Again, I'm not saying anyone should ever do that. If this was a trade, there's no way you could have lost in it. So we called the 400s all the way up here, right at the strike, and it went boop. Again, options are about getting the direction right and momentum too. And of course, you've got to get the timing right in it too. You can give yourself a cushion if you want, but the longer out, the more you pay up. And I just figured, listen, if it's not going to go in the time that I wanted, then how do I know it's going to go at all? I mean, look at the time that we're in. Look at the volatility that we're having. So that's the other bugaboo. Now here we did 3 contracts, beginner trader risk, just to show you. $1,700 you could have risked and made $4,230. Beautiful trade. Beautiful trade, 362% return on investment. Same trade, less size. You could have taken one, still with huge profit. So the one thing about options is if you don't have a lot of money, to open up a margin account, and you don't feel comfortable going to a prop place for whatever reason, can't find a good one, whatever, you think the fees are too high, an options account you can open up with any broker with about $2,000. So again, you can open up a cash account. So it's something where if you want to do trading and be active, options are a cheaper way to do it, because obviously if you did this trade on margin and you shorted the market at the price point of 400 on that particular day, obviously, again, the SPY example, the previous example, the day trade, you need margin to do a trade like that. Okay. But again, I am buying the call. I am buying the put. I am selling the call. I am selling the put. And yeah, I got to get it right. I don't like doing spreads or anything like that. That's like 50-50, don't even know if it's going to work kind of thing. I'm like 100% conviction or I lose. So I either take the trade and I win big, or the trade loses. That's it. That's how I look at it. If I'm 50-50, then why am I even doing it? If I'm unsure of myself, I pass. And that's why there were some days when I said, oh, there's nothing good here, where we didn't do any trades. We just pulled back. Okay. So let's look here at Netflix. This was one that we did in Netflix before the earnings. Okay, got the drop into the before the earnings. I called on 1-4, the 580 Netflix puts that expired on the 7th, pretty tight. Tuesday to Friday, got to get the drop, got to get the move, got to get the direction right. Cost was $5, which to be honest with you was kind of cheap for Netflix. 15 contracts, risk was 7,500, sold at 30. Every single trade that you take should have similar risk, whatever amount you want to do. You pick it. It should have to do with the size of your account. If you have 30,000 in your account, if you have 5,000 account, you have to choose the risk of the dollar contract amount of it based on the size of your account. And you should never risk your whole account in one trade either. This was a 500% return investment trade. And this is even way before the earnings. But I mean, I was reading the direction this right. Again, crazy to hold something into the last day. But let's go back. This was 1-4 into the drop, 580s. Here we go. Take it up. Boom. We did it. Got the drop and into the gap down here. She could have exited here in the 6. Again, take it to the right. You see where we are. See where the stock price is. See where we did it up here. Boom. Get the drop. Get out. Just that's it. You book it. Nice trade there. And really, this was not expensive for Netflix, to be honest with you. You could have taken 2 contracts, risk 1,000 and made $5 grand. A couple of days, Tuesday, just get the drop. 4, 5, 6, boom, you're out by Thursday. I mean, it's just, you know, again, it has to do with the momentum and the direction, and the direction where you're reading it. Where is the institutional money taking it? And timing too. Timing the market has a lot to do with whether or not you make money as a day trader. Again, I had called shorts. And actually, with the rally we had with where I called the shorts, you could still be up and stuff today. But I think you were up so much today. If you didn't get out, it was crazy. Hopefully everybody did get out today, because we're bouncing here. I don't know where we are tomorrow morning. No one knows. We'll be gapping tomorrow morning. But the whole objective, the whole idea is to get momentum and direction right, and to have more winners and losers. Trading is not about holding something forever to a piggy target. It is about taking more winners than losers and booking money along the way. You will have huge trades if you come and trade with me and sign up that will just go that you have no control over, and boop, it's 500% or whatever. But you can't expect that in every single trade. It is nice to have everything working in a flow here. Again, we'll see where we go. We'll see where we go tomorrow. There's too many big earnings out this week to even predict the direction between now and Friday. Again, Apple is out Thursday night, and IBM isn't really going to move the market. We may have some follow through tomorrow morning in this bounce from tonight, but don't bet on it. Again, there's so many economic things going on, and I talk about all these things on TV all the time. We're talking about getting involved now in a military conflict with Ukraine and Russia. I mean, this was always kind of out there in the last few weeks, but this will be a disaster for the market if it actually happens. So you got to be very, very careful. And again, you always have to book money. If you're up, you've got to take it. And say you have a position, say you have 4 contracts or something or whatever, take the profit out in 2, hold 2. Take the profit out in 3, hold 1, or something like that. To be piggy with everything doesn't make any sense at all. You just can't be like that. How much of the account of the percentage do you put on each trade? Well, I would say if you have a small account, and by small, I mean $5,000 or less, you should not be risking more than 10%. So say you have a $5,000 account, I wouldn't be risking more than $500 a trade. Because worst case scenario, the trade loses, you still have $4,500. You can't have a $5,000 account and risk 20% of your account, which would be $1,000. I would not do that. So I'd keep it around 500 or less. Now, if you have an account where you have $100,000, okay, I would not take necessarily $10,000 risk, which is 10% of the trade. I mean, I think 2,500, 2,000 is a good risk for a $100,000 account, and that may be conservative, but so that's my 2 cents on that. Okay. If you have a small account, you really can't afford to lose. You've got to book money, even if it's almost kind of scalping. If you've got more money, the benefit is you can risk, you know, like I said, half that, like 5%, but you can hold and you can take more contracts, and then you can get out of some and book some and get safe with some of it, and then hold a little bit to get a bigger move, whether we're doing it overnight for a couple of days or one day. So that's the benefit of having more money. You can make money with a small account or a big account. The only difference is if you have a small account, you really can't afford to lose. And so if you get a move on the particular day, you should probably get out just to book it. You're trying to grow a small account into a big account. Do you follow what I'm saying? And again, if you have more money, then you could hold things a little bit longer with the portion by divvying up the size. So again, what I'm doing is looking for power money, trading on the side of that power money. And it's about having the consistency. I'm looking for the institutional money. It's in charge of the market and stocks at all time. Even if you think it's not, it absolutely is. So what tells me that? My rating system, the 26 points. So it's just one of these things that if you know this, if you've been attempting to do this for a long, long time, to make in this business, you've just got to win a lot. You've got to win more than you lose, and you cannot lose a lot. I use stops in my day trades, and I don't have stops and options because the risk is the stop. You can't lose more than you risk. If you risk $1,000 in an option, you can't lose more than that. okay? And I do use hard stops as limit order stops in my day trades. You've got to win more than you lose to make in this business, even with the low fees that we have right now. You're not going to make it if you're not consistently winning. And year over year, you're going to have times where you end up trying to have to refund your account if you're having bad days or bad weeks. You've got to have winners. It's the only way to consistently make profits and keep going. You've just got to win more than you lose. And I think a lot of people find that difficult because they don't have the focus. And people are really finding it difficult this year because what they're doing right now that worked last year in 2021 is not working this year, but it really wasn't a strategy anyways. And I'm talking about the buy the dippers that people do. And for some reason, that's easy for people to comprehend. But again, it does not consistently work. People got lucky last year when they were doing stuff like that. Any questions here? Anyways, if you knew what something's going to do before it does it, you can make a lot of money. This doesn't mean you know how the IBM report's going to report or Netflix or anything else. It means that you know before the open, if it's going to rally or if it's going to drop. And that means you're poised and ready to go by 9:30, 9:35, that you can get in the trade aggressively and get the move before the move even happens, okay? Then when you learn how to do it, you just get good at it and you do it over and over. Every single day, the same thing. And again, you're looking for institutional money and then you just duplicate it. Same thing every day, but a different stock or different ETF. So it's all about the points. Again, I teach this in a class. If you're interested in the class, I do not have upcoming class dates scheduled yet. I've had a very busy start myself to this year, and we're busy trading right now. It's trading season. If you're interested in the class, you can email me. If you're interested in upcoming class dates, I will let you know. But the class teaches you how to rate the gap, how to find the high probability of directional bias for the entire day of one particular stock. Big move in the day, early confirmation of the bias in the move between 9:30 and 10, precise entries with follow through, and a good risk to reward target potential, which obviously everyone wants. It's about correct trade selection or stepping aside and doing nothing, which sometimes is the case. Sometimes you have to say, wait a minute, there isn't anything good today. Wait a minute, this isn't clear. Making money consistently is about correct trade selection, stepping aside also when it's not there. It's about getting the directional bias right consistently to know what direction to take the trade. I was talking about buying the dips. This does not mean that that never works. Of course, sometimes it works. Sometimes buying GME works in a Reddit chat room and people made millions of dollars and now they've lost their shirts because they didn't get in or they got in too high and the stock has done nothing but tank since then. Do you understand? Sometimes you go to Atlantic City and you play and you gamble and you win, but most of the time the odds are against you to do that as well. So this isn't about sometime anything works. Sometimes things that make no sense work. But a lot of times you have to win in order to move forward and do this for a living or for any reason at all. I mean, even if you're doing this part-time and you're losing money year over year over year, what's the point of it? Like, seriously, what's the point? I mean, you've got to make money for doing this. Trading successfully means focusing on taking trades with institutions. And that's, hard for a lot of people to read. I mean, it's easy in something like Netflix. It's a good example. But there were people on TV that were actually saying on Friday, which I was laughing my butt off, when I was watching some shows on Friday. I'm not going to say what shows, like we're telling people to buy Netflix. I was like, I called my broker and I'm like, can you believe that so-and-so is actually on TV right now and actually saying to buy Netflix? And we're like chuckling, like seriously. And I didn't see where that closed today, but holy moly. Being on the side of institutions increases your odds to make profits because institutions make stock trends and they make the market. Institutions move stocks either up or down. And if you want to get paid, then the key is to be in the trade with the large directional moves. If you're trading with institutions, you are only on the side of the momentum and also trading with professional traders, which is where you want to be. Even if you don't have millions of dollars or hundreds of thousands of dollars in an account, you should be on the side of the people that are trading these stocks, whether going long or short. And as an individual trader, you will be more successful if you trade like a professional, even if you work for yourself, even if you're doing this part-time, even if you're only doing like 2 options trades a week, and even if you have a small account. You have to act like you have a big account. You have to act like the money that you have is actually very important to you and you do not want to lose it. You want to keep it and make more. Okay. How long do I expect someone to learn and be consistent? If people are following me, it doesn't have to take that long for people to do well. As far as a full understanding of the class, if you do the course and not just sign up for the trading room and the options newsletter, which you can, if you don't just want to get the trades, you want to learn it, to say how long it's going to take you to get it, it depends on every different person. I don't know you, Baldwin. You're asking questions. I don't know how long it's going to take you to get it. They say when you do a class, the class is 14 hours, that it takes you time to process it. Does it have to take you weeks and months and years? No. If you're in the live trading room, I think it's going to happen a lot faster after the class, but you can learn everything in a weekend. And some people do. I've had people that are coming to me that are trading longer than I'm alive, and they do the class and it all gels and I pull it all together for them and they get it. So somebody that's brand new, that's never traded before, I've taught people like that. And sometimes there's a learning curve for those people. How long it takes you to get it is 100% up to you. And every person is different and every person experience is different. And that's as honest as I can be. Some people have no interest in learning. Some people only want to get my trades. They sign up for the options newsletter, they sign up for the trading room and they trade and they want to make money and that's it. Again, I think learning is important. Learning and doing is important. And if you learn and do, you're going to learn it a lot quicker. I hope that answers your question. The rating system looks at 26 points in the daily chart of a stock. The rating system is a checklist. The checklist tells you what to look for in the price of the stock to read the correct direction. And I'm doing that. Okay, I'm doing that for you in the room in the morning when I'm saying X, Y, Z or whatever. So again, that's the benefit of coming to be a remember if you want to just do that. But learning it, I do think, will help you along much, much better. The points tell you where the money is flowing and why does this matter? So you know what direction to take it for profit. So you're not hearing something on TV that's telling you to do something that's the opposite, because we shorted Netflix and then you don't hear that, say, oh crap, and lose conviction and kill the trade. No, okay? Because again, I call puts in Netflix on Friday, and depending on what price you paid for them, you may have been down in that trade on Friday into the close the way that it pushed back until this morning. So you would have had to have conviction to hold that trade from Friday to Monday to get the move, which it had today, okay? So again, this is where understanding and learning and knowing does count and matter, and ignoring the noise and everything else that's out there. Now, what do you need to make trading work? Again, you have to have, number one, a strategy. We've been talking about that all day. For me, it is gaps. Number two, you have to have good money management. It means booking the money. It means risking the same on almost every trade you take. It means do not overtrade. It means do not do trades on days there isn't anything good. It means to have goals. I would have daily goals and weekly goals and monthly goals. Your goal is to take a trade and get one. You risk 1,000, your goal is 1,000. Okay, that's it. So that's 100% return investment in option and 1-to-1 risk to reward in a day trade. Some trades will be more. Some trades will be more, but you don't know until you're in it and you see how it's going, and also see if you have the market with you. And number three, I think a mentor to follow for the picks is extremely important and helpful. Don't trade alone, particularly in this market in 2022. Having a mentor is invaluable. Following someone else, it just makes it a lot easier and less stressful for you each and every morning. If I come in and I said, we're going to fall for planning here today in the market, that's going to help your conviction. If I get up in the morning, I said, we're going to rally today, be careful in the shorts or whatever, we're going to quick it out. Everyone needs a mentor. It does take time to learn. The time it takes to learn will vary from person to person. It's up to you. I am here to answer your questions, to help you learn faster, okay? But this whole idea that you can't make money is totally ridiculous. You can have high goals. I don't care about that, but you have to have the money to be able to take the risk in the trades. And I do think the knowledge is extremely important too. You can earn a living trading. There's a lot of people with me that are, and I have people with me for a long time, and they're still signing up for the subscriptions year over year. They like having me there every day, like we're talking about with a mentor, even though they know how to do it themselves. There is something extra because I've been doing this a long time and nothing else, and only gaps where I do have a high level of intuition for what's happening in the market and stocks. That is an overlay. That is something you'll only get by being with me every day. That is not something you learn in the class, but I will tell you, if you do this and you take the class and you learn it and do nothing else, your intuition will be heightened too over a long period of time. Again, one of the reasons why people fail is they don't have a strategy at all. And even if they have one, they don't stay on top of it. They never get really good at it. They move off of it. In other words, if it starts losing for them, then they immediately quit and move off of it. Again, sometimes I take trades that lose, but we haven't had losing trades this year. But I will have a losing trade again. I think I would love to have the whole year be positive. I'm extremely focused now, but I mean, in realistic time, If you figure 10 trades, figure again, every 7, 8 trades is going to win and the rest are going to lose. That's why you have to size yourself and can't risk your whole account. But to think that you can't get good at this over time and better and better and better and better year over year, it is possible. Instead, most people get worse over a year. They get so negative and so down about classes and learning and trading and risk because they've been losing for years. It's not supposed to be that way. It's just not supposed to be that way at all. You're supposed to get better the longer you do something. It's the same way when you're in a sport. When you do a sport, you get better the longer you do it. My father's a golfer. He's a really good golfer. And if he's been golfing for years, if he plays a lot and the weather's good and he plays late into the year, he plays in tournaments and stuff locally. It's not supposed to be that you get worse over time. It's supposed to be that you get better. But you know this, if you've been attempting this for a number of years, that's probably not the case for you or you wouldn't be here. So the reality is that people just have a mixed up, thinking process in their head about money and trading that kind of gets in their head and then it affects everything that they do. And then people trade based on fear. And again, that plays a part and a key part into this as well when people are doing it. Having the positive attitude is important as well. In fact, I should have put that in here. What do you need for success? So number 4 would be positive attitude. Now, with a positive attitude, are you going to be able to do it without a good strategy? No, but having a positive attitude will help you find all the rest. Will help you find someone like me. Any questions here? I see we're getting close to the time. Anyways, we talked about money management. Don't be afraid to take a stop. Be deliberate in your trade choices. Conviction. If you're wishy-washy, don't do it. Education is important. I think if you want to do well long-term. And again, I think the edge for me is that I can predict what's going to happen before the open. And again, that's skill. It's a skill-based. You're coming to me and you're going to learn a skill. And you can make a living if you want to do this, if that's something that you really want to do. Again, I don't have a date for the next class. If you're interested, email me. When I find the next date, when I book it, I will let you know. I'm just very busy right now. It's a busy time to trade. And then obviously I told you I'm working on the television show, but if you want to learn, you can come and learn to me. And if you just want to sign up and trade, you can do that too. But it's all based on technical analysis. It's starting slow and building it. It's chunking out a small account up to a big account. It's taking a big account and still chunking it up so that you can take profits and get somewhere with this. Personally, I like doing options and day trades. If you want to do one and not the other, that's up to you. But I focus on quality. Quality, quality, quality. We do one thing a day usually. Like I said, we did Netflix Friday. Today we did the SPY. So put a plan of action in place. It's early enough in the year. You can say, you can go on a New Year's resolution. You can call it a goal. You can say, this year, I'm going to be consistently profitable trading. I'm going to be profitable by the end of January. I'm going to be profitable by the end of this week. I'm going to make this much money by March 1st or whatever. Set some real solid goals for yourself and then set a course how you're going to get there. If you don't have a strategy, your first goal is to learn one that works. And then you have to put it into practice, okay? So I'm teaching people how to do this on a regular basis every day. We're learning institutional money positioning in stocks. We're reading the gap. I'm reading the gap in the morning. This is what you would learn in the course, okay? Any questions here so far? Okay. Anyways, it's about working smarter, not harder, and then thinking about how much do you really want to make this happen for yourself. I think that the longer that you do this, once you're kind of bitten by the market bug, you never you have it forever until you've made it. But I think people are so up or down. They're so wishy-washy about it. Make the full commitment. If you want to do my class, it's $7,000. That's a commitment. It's an entire weekend. It's a time commitment too. Any of my products and services, they're a commitment financially. So you've got to do it. You have to do it. And you have to be all in saying, I'm going to learn this. I'm going to get this. I'm going to do this right. I'm going to listen to what she's saying. I'm going to take it all in. You can use my strategy for swing trading, but I do this for day trading and options trading, margin day trading and options trading. But you can use my strategy for swing trading too. You could have shorted the market and done swing trades in the market if you'd wanted to in the last 2 weeks. I called puts on the options letter that were 1 to 2 weeks out. You could have done swing trades in those. The difference between outright swing trade stock positions and options is the protection. You protection in an option where you can't lose more than you risk. In a swing trade, if you're outright shorting it on 2-to-1 margin overnight or cash, then if you're upside down on it, your account's really going to swing around and you don't have the protection. Do you understand? And that's whether you go long or short. But you can rate the gap and do swing trades if in fact that is what you want to do. My email is melissa@thestockswoosh.com. You can go to my website, www.thestockswoosh.com. So empower yourself today if you want to do it. If you want to learn my class, again, email me. Let me know if you're interested in the next class. Now, just if you want to sign up for the newsletter, if you want to sign up for the trading room is $6,999 a year. Average is about $580 a month. Room hours are 8:30 to 10:30 a.m. Eastern time. This is a non-Golden Gap course student price. If you do the class after the class, the price is less. Just want to sign up for the room, you can sign up today and start tomorrow. Start getting the trades. It's 12 months, 1 year. I'm doing an options course this Thursday, $2,500 for the half-day class, and you get 1 month free of the Gap Options newsletter. This class is online. It's January 27th, 11 to 3. If you want to sign up, you can sign up for that as late as Wednesday. Today is Monday. Again, email me at melissa@thestockswoosh.com if you want to sign up. If you want to sign up for the options letter, this is very popular. I had a lady that signed up. She paid for the annual subscription in 2 weeks. She just signed up 2 weeks ago. She texted me Friday. She's thrilled. Again, everything's working right now. So she's not even risking that much. I think she's risking about $1,000 a trade. $69.99 for 1 year, 12 months, and I have a half annual at $49.99 for 6 months. This is an option letter focused on quality short, long-term overnight options trades. The trades are emailed to you in live time. Most of the trades are sent out in the pre-market. You can't take the trades till the open. The targets are included in the letter. You determine your risk. If you have questions on that, you can email me. So this is an email service. The room is a live room, okay? And if you would like a trial to the live room, this is not an options room. This is a day trade room where I'm calling the trades in the room. This is, again, a day trade room, no options. The options is a newsletter, and I do not have a trial for that. Email me at melissa@thestockswoosh.com if you're interested in this. And again, there's my email as well, and you can go to the website too, okay? If you want a trial, you can have a trial for this week if you're interested in the room. Just know the room isn't about options. Sometimes we do the same trades that are day trades and options like we did today in SPY and the NFLX too, but not always. And if you're interested in the class, email me. I will put you on the list. And when I know the next available dates, I will email you and you can sign up. Okay, this is a 2-day class. It's Saturday and Sunday. It's 9 to 5. I do not have the dates for the next class yet. Let's see if we have time here really quick. Do we have time, David? I can pull up IBM. Let's see, it's 4:50.
Yeah, you have a couple minutes.
Now this thing here, I don't know if this is going to work. Can you see my chart or not?
No, it's still showing the presentation. You might have to stop your share and then reshare.
Let's see.
I can turn off your share for you. And now if you reshare, you can select the chart. Okay, now I see it.
Can you see it?
Yeah.
Let's just see what's happening here. So this is at 136. 136.25. Again, it's really, really early to do this. It's 5 o'clock. I will look at this tomorrow morning. But, you know, if this opens around here tomorrow and the market's up and the market rallies, this is probably going to rally. This is probably going to rally tomorrow. If it gets the market. I think this needs the market, to be honest with you. So this is up. Wow, interesting. Let's look here quickly at the market. I was just talking about this bounce. I was just talking about this. And let's look at where we are tonight here now, just real quick. So here's where we closed and we're up. So we're about 50, 60 cents up now tonight from where we closed. So we're lifting over. Wow, that is a huge bounce. It'll be very interesting to see what happens. Huge, massive sell-off. Looks like we're going to be up tomorrow morning. But remember, Apple's Thursday night, and I don't know what that does. I do not know what that does, and that's 2 days away. So if for some reason that would tank, that's going to drop us down again. Or if it lifts, this could take the market all over and reverse everything we have done in the last 2 weeks. So this is what I'm talking about volatility. Big bounce here into the close here. Huge, big tail, big green bar. And we're up tonight. So IBM looks pretty good right now, because if the market rallies tomorrow, that should rally too. So I'll look at it tomorrow. Too early to rate it. I wait till the morning, but hard to believe that that's going to fail if we get a green market tomorrow. So that could be a nice long. Again, I like to go long and short. We're looking for momentum. Any last minute questions here? Let me give the next person a chance to get on. Any last minute questions from anyone? Email me, Melissa, SWOOSH.com. If you have questions, I'll just plop it in the room. Thank you so much for having me. And good luck, everyone. Have a good night.